Good morning, ladies and gentlemen, and welcome to this Bank of Zambia interactive discussion. My name is Luanga Muilu, and I will soon be introducing our guest for today. Our topic, as you may have seen from our advert earlier, is loans, and specifically the rights and responsibilities of consumers or borrowers of those loans. So, on the program today, we have Mr. Nsumbu Chishimba, who is an examiner, consumer compliance and market monitoring in the Financial Conduct Supervision Department of the Bank of Zambia. Good morning, Nsumbu, and welcome.
Good morning, Wanga. Thank you for having me.
Great. So, to get us started, tell us briefly what the functions of the Financial Conduct Supervision Department are.
Okay. So a bit of a background. Prior to the formulation of the department, there were two different departments. There was the Non-Bank Financial Institution Supervision Department and the Bank Supervision Department. To align our supervisory oversight with industry best practice, the bank underwent a restructure which specifically focused on a four-pillar framework, which is the ICIP framework. So the ICIP stands for financial integrity, financial stability, financial inclusion, and financial consumer protection. So this framework gave us the basis under which two new departments were formed, which is the Prudential Supervision Department, which has a specific mandate to look at the financial soundness of banks and deposit-taking financial institutions, which led to the formulation of my department, the Financial Conduct Supervision Department, which has a specific focus on three key elements of the ICIP framework, which include financial inclusion, financial consumer protection, and financial integrity. So our mandate extends to non-deposit financial institutions, which are your microfinance institutions, that are not deposit-taking. The deposit-taking ones are supervised by the Prudential Supervision Department. So our key focus as a department is we have a unit that is dedicated to licensing and designation of these institutions that we've mentioned. We have a Financial Sector Development Department, which is mandated with the aspect of financial inclusion and financial education, which is also linked to financial literacy. Then we have a unit under which I am, which is the Consumer Protection and Market Conduct Unit, which specifically looks at all-encompassing matters on consumer protection and market conduct of the institutions that we regulate and supervise. Then we also have the integrity aspect, which is overseen by the AML-CFT unit, which is anti-money laundering and counter-financing of terrorism. So our mandate extends to those three key areas. And anything else will come as we progress through our discussion.
It sounds very interesting indeed. So I was just listening, and I was particularly interested to hear more about two components. One is financial inclusion, which also incorporates financial literacy.
Yes.
And the other one is financial consumer protection. Can you tell us a bit more about those two?
Okay, so financial consumer protection is simply self-defining almost. So users of financial services, which are the target market for the institutions that we regulate, consume different manners of products and services that are offered by these financial service providers. So consumer protection is about ensuring that these institutions are, one, not taking advantage of the consumers, no predatory practices, that all products and services that are released to the market are vetted before they're actually released to the market, and that customers know their rights and responsibilities. Consumer protection is very important because it focuses on ensuring that there is trust in the financial services. This has a broader effect because it leads to confidence in the system that we have, and also leads to growth within the economy. On financial inclusion, it simply means all-encompassing access to financial services by different classes of people, more especially the vulnerable, right? there's obviously an assumption to say the elite have access to better financial services, but that gap needs to be bridged for the economy to develop. So regardless of what service it is you want to acquire from these financial services, regardless of your income level, the idea is that financial inclusion should be all access for everyone within the economy, simply put.
Great. You've made reference to how there's a range of services and products. But I'm aware that one of the main things, the most frequent engagements that the bank gets from members of the public is on loan products.
Yes.
So maybe as a starting point, can you help us understand in simple terms what a loan is? And in addition to that, some types of loans that we have here in Zambia.
Okay. So a loan is, simply put, an agreement that is between a borrower and a lender. For a particular case, the borrower is, for example, you and I. We go to a commercial bank or a microfinance institution with the intention of obtaining a certain amount and agreeing to pay it over a certain period of time with interest. That's simply put what a loan is. Different types of loans vary. A loan can vary from a salary payday loan, which is payable within a week, all the way through to a mortgage, which is paid over a longer period of time. So, like I had mentioned earlier, there are different financial institutions within the country. There are the commercial banks, which offer personal loans. These personal loans are for personal use, without restriction as to what you're using the money for. These vary in tenure. Like I said, some are payable within a week. It depends on your affordability. Some go as far as 5 years. That's usually the tenure within which these products fall. Mortgages are a bit long-term in nature, and these relate to purchase of property. So you want to acquire a house, you want to acquire a commercial building, you obviously get financing from an institution to be able to purchase that property. There's also vehicle asset financing, or which is leasing as well, lease financing. This is where you intend on purchasing a motor vehicle or heavy-duty equipment. So vehicle asset financing is also another type of loan. So the institutions that we regulate, I need to add that as well, are institutions that are classified in 2 tiers. There's tier 1 institutions, which are usually your commercial banks and your building societies, and then there's the tier 2, which is the microfinance institutions. I might add as well to say our regulatory oversight only extends to these 2 tiers because we are the primary regulator and issuer of licenses for commercial banks, building societies, which are more or less like your Zambia National Building Society and your Zambia Home Loans. And then you also have microfinance institutions, which are classified as tier 2 institutions. So in the tier 2, there are 2 types as well. There's the deposit taking and the non-deposit taking, which I alluded to. So you have your Bayports, which are the deposit taking, and then you have IZWE, which are the non-deposit taking. You also have your ZFINs, just to name a few. Then we have tier 3 microfinance institutions. These are regulated specifically under the Moneylenders Act. So the Ministry of Finance is responsible for the issuance of these licenses, and it's under the Office of the Accountant General. So that distinction needs to be made very, very clear as well. Yes.
Okay. You've actually done a good job also of giving us an insight in the regulations that sort of govern money lending services in the country. So I'm curious to know, outside of what is regulated, what you have just referred to, Bank of Zambia under the Accountant General, are there any other services outside of, and how are they regulated?
Okay.
Or is that the extent of regulation as far as money lending is concerned in Zambia?
As far as money lending is concerned in Zambia, that's the extent of which.
Okay.
And we have to be specific, and we have to emphasize to say, as far as regulated entities go, that is it.
Okay.
So, for the institutions I've alluded to, which are under the oversight of the Bank of Zambia. The primary act we use is the Banking and Financial Services Act of 2017. There is a specific clause within the act that specifically mentions to say money lenders aren't under our regulatory ambit, they fall under the Money Lenders Act. So the primary body that supervises and oversees the Money Lenders Act, like I mentioned, is the Ministry of Finance, and they're responsible for money lenders. So we also emphasize to general members of the public to always deal with licensed institutions. This provides a safety net for them and ensures that they do have recourse, which we'll get to a bit later in our discussions. But for the purposes of our discussions, those are the two primary legislation that we use for oversight of lending in the country.
Very insightful indeed. Now that we have situated the discussion, we understand the context, we know what the role of the Bank of Zambia is, and who within the Bank of Zambia executes that function. I think we can now get to the rights and responsibilities of both the lender and the borrower, because you did, when explaining, you did say that there has to be two parties to a transaction in terms of loans. So tell us the rights as well as the responsibilities of both parties.
Okay, so we'll start with the responsibilities of the institutions that we oversee as the Bank of Zambia. So prior to any product being released on the market, that product has to go vetting by our department. So a product application, for example, a new facility that they want to release to general members of the public, before it's actually released, it's submitted to our department and we verify it to ensure that there's mandated disclosure, there's no predatory practice. Any associated advertising material that's related to the product as well is vetted to ensure that clients fully know what they're about to get into before they actually contract this debt. So the responsibility of the financial institution is, one, to ensure that information is provided to the customer prior to them getting into the agreement. This information is, for the purposes of this conversation, we're speaking about loans. The Bank of Zambia issued a directive. It's actually a circular that speaks to a document called the Key Facts Statement. So the Key Facts Statement is self-explanatory as well. It basically details all details about the facility that you're about to obtain from a financial institution. It includes the loan amount that you intend on obtaining, the tenure of the facility, which is how long you're supposed to pay that facility. It has all arrangement fees, such as credit insurance in the event that you are disabled, loss of employment for a certain period of time, and also death. Credit insurance is factored in. There's an arrangement fee, which is them just organizing the facility for you. There's a CRB check fee, which is ideally supposed to be one-off.
Break down CRB for us.
Okay, so that's the Credit Reference Bureau. I'll speak to it a bit later, which is under the Credit Reporting Act. Prior to you being issued a loan, the financial institution has an obligation to ensure that they do a credit check on you. What it basically does is it informs the financial institution as to any other debt that you've contracted, and it also involves an element which we've introduced, which is the affordability framework. So prior to you obtaining a facility, we have released regulation that speaks to say you are supposed to, at the very least, go home with 40% of your income. That's for employed individuals. So employed individuals can be in the private sector or the public sector. So that 40% threshold cannot be exceeded.
You cannot go below.
You can't go below the 40% threshold. So the credit reference check basically has a summary. The moment you get any facility from any institution that we regulate, they have a reporting obligation to report how the loan is performing over a period of time. This is called a credit history. It informs the financial institution of you, gives them a view of you as their customer in terms of how your credit history is and how your facilities are performing. Also, on the Key Facts Statement, like I mentioned, there's the CRB check fee, what's there, and then there's arrangement fees. Then it's broken down. Remember, we mentioned earlier to say once you obtain a facility, a facility has two elements. There's the amount you're borrowing, there's the interest that's going to be charged, which is going to be amortized or simply costed over a period of time. So the amount that you obtain is not the amount that you're going to be paying at the end of the period. There's an element of interest that's included. All that information needs to be included there. Additionally, on the same key fact statement, it breaks down month on month how the fees are broken down so that you know how much it is you're going to be paying on a monthly basis. It's a very important element to emphasize because people need to understand certain aspects. Once you get money today, there's time value of money. The value of money today is not going to be the value of money later on. So all this information informs you in terms of the decision that you're about to take in obtaining that facility. Finally, there is a section that includes rights and responsibilities, which we're speaking about. So the rights and responsibilities are that, one, you have the right to pay off this loan before the end of the tenure. And that responsibility of paying it off, that comes at no penalty because you have the right to pay it off. So there will be an amount that's outstanding over the period. Remember I mentioned to say there's a month-on-month breakdown?
Yeah.
That month-on-month breakdown, as you're paying the facility is reducing. So at a particular time, if you go in June, a system is supposed to generate a report to show you the status of your loan at that specific date. You're able to pay off that facility without any penalty.
Without being told, no, you have to cover the interest up to the end of when it should have.
You only cover the interest for the period that you've covered. Additionally, there is information in terms of recourse, which we'll speak to. In the event that you're not happy with certain elements of your facility as it is, you have the ability to go and report to say you're complaining over this issue, all the way up to senior management, the top executive of that specific financial institution. In the event that you're still not satisfied, we emphasize to the institution that you should include the Bank of Zambia details for escalation of a complaint, only once this process has been fully exhausted within the financial institution. So all these are measures that we've taken to ensure that customers are protected. Additionally, there's also information with regards to, on a quarterly basis, there's what we call a monetary policy committee. The Bank of Zambia has a policy committee that sits and discusses to see movements of the policy base rate. So the policy base rate is basically the minimum rate at which a facility can be issued in terms of interest in the country. The institutions we regulate then add what they call a markup, which basically then feeds into what we know as the interest rate for a specific loan. So in the event that there's been a revision upwards of the MPR or the monetary policy rate, that information needs to be communicated to the customer. We emphasize to say that clause should be included on the key fact statement. Why is it important that we mention this element? Because in the event that the monetary policy rate does go up, there are two things that will happen. It's either the tenure of your facility will increase because your interest rate has gone up, or your repayment amounts on a monthly basis increase.
And that applies to a variable interest loan?
Yes, that applies to a variable interest loan, yes. Which in most cases
is what is available,
to most customers out there. And this is for our regulated entities. So that is communicated in the key fact statement as well.
Okay, so if you're just joining us, ladies and gentlemen, welcome. We are talking about loans and specifically the rights and responsibilities of consumers or the people that borrow. And our guest is Mr. Nsumbu Chishimba, who is an examiner in charge of consumer compliance and market monitoring here at the Bank of Zambia. So, Nsumbu, we have some questions from the audience before we go into a different part of the discussion. Maybe we can speak to some of these, and also to just tell our audience, thank you very much. We've seen the interest and even your comments. We really appreciate that. So there's a question from Francis Dalisonjovu, who says, is the feeling that the Ministry of Finance provides adequate oversight into Tier 3 institutions? I say this because everyone there is a public outcry around predatory money lending practices. The first point of reference is Bank of Zambia. how best can we also get sensitization around regulation on Tier 3 institutions? I think that they're asking about the institutions that are licensed by the Ministry of Finance, and I'm assuming that that then is best addressed by the ministry, or do you want to?
Yes. Additionally, we are cognizant of the fact that information might not be public available, but the ministry does a considerable effort to sensitize or inform people. There are gazette notices that are released in the newspaper as well to inform general members of the public of newly added members of the moneylenders space. And this is, I think, done on a monthly basis. I have seen that gazette notice that's there. But like you've rightfully said, we are the Bank of Zambia, so we cannot comment specifically on regulation that's overseen by a separate body. So I think that question will be appropriately addressed by the Ministry of Finance.
Okay.
Yes.
So I heard also in the question an aspect that is also quite raised frequently by a number of members of the public, and that is the issue of high interest on loans. Some complain also about predatory practices, which you had also referred to. They complain about these lenders who become so aggressive, like when they're recovering the money. So they just help us unpack some of these issues.
Okay. If for the members that have just joined in, and to those that were earlier on the call, I had mentioned to say, prior to a license being issued to these institutions, we have what we call conditions for designation and licensing. So these conditions give guidance as to the conduct of these institutions once the license is given to them. It's embedded within the Banking and Financial Services Act to say unconscionable debt collection practices are not to be tolerated at all. What does this mean? Harassment of clients is not tolerated at all. And that's why we mentioned to say there's a dedicated unit now, which I'm in, that specifically listens to practices that are unbecoming within our financial services sector. So remember, the Bank of Zambia was enacted by an act of parliament. So we are in existence due to laws. So we follow these laws religiously and to the letter of the law specifically. So all our operations are guided by the law. We do not wake up and decide how we're going to behave. So like I mentioned, there's a specific section within the Banking and Financial Services Act of 2017 that speaks to there should be no harassment when you're collecting debt. What does this mean? Meaning calling clients after the standard operating hours is not tolerated. Use of abusive language is not tolerated. There are measures that can be used in
ambushing them as they drop off their children at school.
Exactly. So the person walked into your business to collect or to sign up for a facility. The same modicum of respect should be extended to the client when you're collecting this money. And you do have provisions within the law that allow you to take, sorry to use the stringent measures, but as and when it gets to that point, there are measures that are put in place to ensure that there is recovery for that facility once it's issued to a client.
Okay, that's an interesting aspect, because much as the consumer is being protected, it does not mean they now have to abandon their obligations.
Yes.
Okay.
Also, just to add, the thing about high interest rates is there is choice. There is always choice. Not one bank has a specific interest rate that they levy all across. That's why it's called an agreement. Prior to you getting into a relationship, you have a choice as to whether you can enter into this agreement or not. So there's freedom of choice. We also have an anti-competitive clause or section within our Banking and Financial Services Act, which speaks to a client having the freedom of choice. One entity cannot employ monopolistic tendencies so as to create an uncompetitive environment, meaning they get an unfair advantage over another institution. So customers need to be aware to say they have the freedom of choice. And this freedom of choice, like we alluded to, speaks to our agenda for financial inclusion. There are all manners of products and services that have been released as a result of the bank's initiative to ensure that there is financial inclusion. So clients have the option of choosing cheaper debt over another. Also, like I mentioned, we have a unit that's specifically dedicated to financial literacy initiatives. These initiatives include curriculum that's being developed at a grassroots level, from primary school all the way to tertiary level, to ensure that there's fiscal responsibility for each and every user of financial services. Also, availability of information as well. If you go to the Facebook page, there's do's and don'ts. There are public engagement initiatives, be at the trade fair, the agricultural show, and also road shows that the Bank of Zambia is actively participating in to ensure that members of the public are well informed. And also, we have extended different platforms through which they can extend queries that they have. You can call into the Bank of Zambia, you can physically walk into our office here in Lusaka, also our regional office on the Copper Belt. But we are aware to say those are just 2 locations. So the lines are available. You can just simply call and ask to speak to somebody. Emails, Facebook, all those platforms are available to ensure that you are informed. There are also ads that are released by these specific financial services providers, which speak to the rights and responsibilities and the information that's readily available to you. You have to remember, due to our oversight of these institutions, you can never be strong-armed into getting into a relationship that you haven't willingly and willfully consented to as a consumer. If you walk into any branch at the moment, you will notice to say there are different posters plastered all over the walls. Those posters speak to some of the rights and responsibilities you have. There is a tariff guide which speaks to the different loans that are available with their associated costs. There are brochures within those institutions that speak to the different products and services that you have. All these are initiatives and requirements that the Bank of Zambia specifically mandates that these institutions employ. That's why we emphasize to say, by all means, if you're accessing a financial service or product, deal with a licensed institution, because there's a minimum standard of behavior that we enforce with our financial service providers.
I was actually going to come to that again, but also just to add, the bank also does proactively put out information on our website, in the papers. We also post on our social media platforms, for example, on the cost of borrowing across institutions, which also speaks to the transparency in loan pricing and how people then have a choice to decide which one best suits their ability to repay. Sumbu, I want to ask you to just repeat, maybe for people that joined along the way, but for those that have been with us from the beginning, just for emphasis, that the consumer protection measures that you're speaking about only apply to those that deal with licensed institutions. Can you please just tell us and why?
Okay, all right. So, like I mentioned before, and I'll mention it again, the Bank of Zambia only extends and carries out its mandate through an act of law. The specific act that we use primarily for oversight of financial service providers is the Banking and Financial Services Act, which informs us and guides us with subsidiary legislation that's been released thereafter, which is directives, which is circulars and gazette notices as well, to support our regulatory oversight. This is important because when you're dealing with a financial service provider, you have recourse. Should you have an issue with this institution, you have the ability to come to the Bank of Zambia and report any manner of misconduct that you feel has been extended to you as a user of these financial services.
Okay. Thank you so much. So we'll go back to questions from the audience. And if you are watching us, please feel free to continue putting your questions in the comments. If we are not able to take your question within the duration of this discussion, we will respond via writing. We will reply to your comment on the thread itself. But for now, there's a question from Shibwembia. Good morning, BoZ. I'm concerned about financial consumer protection rights regarding mobile money services. When mobile users face issues withdrawing funds, to resolve such issues, well, it takes ages to resolve such issues. Meanwhile, they have urgent payments to make. How can you help ensure mobile money services prioritize timely withdrawals and minimize inconvenience to customers?
Okay. So I keep on emphasizing one point to say our regulatory oversight is governed by law. So we have what we call the Bank of Zambia Consumer Complaints and Consumer Complaints and Handling Resolution Directives of 2020. So these directives cover two aspects, the consumer and the licensed institution. So these directives are available on the Bank of Zambia website. Once you navigate to financial stability, there is a portal there which will give you access to the directives. They are available online as well. The directives give specific timelines within which complaints are supposed to be resolved. So simple complaints are supposed to be resolved within 3 working days. Simple in this case would be provision of a customer statement. A reversal of a transaction that has failed is expected to be resolved within 5 working days. In the event that it needs to take longer, we've given them a maximum period of 15 working days. The operative word here being working days. So there's a difference between calendar days and working days. Working days run from Monday to Friday. The reason why some timelines take longer is because there's interoperability in our economy now. Customers are able to transact at an instant between Airtel and MTN, or Zamtel and MTN. So once a matter has been reported to these respective institutions, there's a requirement for them to agree or communicate with each other so that they confirm indeed on which party the transaction failed, and then a reversal is initiated. These timelines are there to protect you as customers, and you have every right to utilize these directives when you're communicating with these financial service providers and payment service providers, in this case, mobile money. These timelines are there to protect you, and they exist for your protection. In the event that these timelines are not adhered to, at the end of this discussion, we will provide means and ways in which you can extend your complaints or report your complaints to the Bank of Zambia so that there is resolution for these complaints.
Okay, so we have a live audience on Facebook as well as YouTube, our Bank of Zambia channels. This next question is from Facebook, from Mwansalungu. Mwansalungu wants to know how effective the CRB system is and who audits them. I ask because most of the Zambian citizens are highly indebted, such that we have now seen the GRZ try to limit the number of payroll deduction on these employees. Sad that even the 40% salary threshold is not properly followed and monitored.
Okay. So it's important to note that the Credit Reference Bureau, which is TransUnion, is actually overseen by the Bank of Zambia. So we are the regulators and primary licensees of all credit reference bureaus in the country. Like I mentioned, the Credit Reporting Act, which gives us power to oversee credit reference bureaus, was enacted and is overseen by the Bank of Zambia in conjunction with the Ministry of Finance. This space is regulated, right? But the over-indebtedness is something that we are alive to, and that's why this conversation is happening. It's a case-by-case scenario, and it's hard to pinpoint what the specific issue is. You can address one issue while the other is lacking. But there's a reason why the payroll, PEMIC specifically, is even limiting how many people can access facilities, because there's a threshold that they have to adhere to. And it's important, we usually, once a complainant comes to us explaining to say they are over indebted, we do offer some level of debt counseling. It's not a solution, it's not a fix immediately, but there are initiatives that are currently underway that we can't speak to that will hope to alleviate some of these issues. The unit that I spoke to, which is the Financial Sector Development Unit of my department under the Financial Conduct Supervision Department, is developing curriculum that speaks to financial literacy. We collaborate with private entities that speak to producing brochures and reading paraphernalia that speaks to how the debt culture can be addressed. It's a personal decision, like we said, it's a matter of choice, but we always encourage customers to say, borrow responsibly. There's also an obligation with these financial service providers to do their own independent assessment prior to issuing this debt, right? Like we said, they are twofold. There are institutions that are regulated by the Ministry of Finance under the Moneylenders Act. I can't speak to that. We can only speak to the institutions that we regulate. And we emphasize to say, like you said, there is information that speaks to cost of borrowing online. We also do monitor how loans are performing through returns that are submitted on a regular basis. Once we do notice that there's an occurrence of an increase in non-performing loans, we do query these institutions because it's a condition of their designation as to what measures they are taking to ensure that the loans that they're issuing don't fall into that category of non-performing, because it does affect confidence and trust in the system that we've built and that we're trying to protect.
A thought just crossed my mind now, because so you have the CRB, which is creating visibility of your active loans. But what about people then borrowing informally? So then there's no threshold being observed. When you speak about over-indebtedness, maybe you can just tell us something about best practice as individuals, not where you're being monitored and you have to comply to something, but just best practice. Any tips, like how to best manage even our personal budgets outside of CRB reporting, for example?
Okay. So the best practice is there's a starting point, which is your income. Your income on a regular basis is fixed. If you're in employment, you know how much it is you're going to be getting at the start of the year, with the exception of an increment that comes either from your employer or a revision in the tax regime where there's the minimum amount that's increased under pay as you earn. What we emphasize is start budgeting on a regular basis. On a monthly basis, you have what you call your obligations. You have school fees to pay, you have rent to pay, you have loans to repay. Then you have a disposable income. By all means, try and protect your disposable income. It gives you room, it gives you freedom. We also emphasize to say consumers should ensure that they borrow within their means. We understand to say there is pressure that comes. That's the common term. But by all means, a decision that's made in haste tends to affect you later on in the future. I earlier started my conversation by saying there is an element of time value of money. The value of a kwacha today is not the value of a kwacha in the future. One kwacha today is more valuable than it is in the future. Try to protect it by all means, and try to be fiscally responsible as well. We have noticed to say some customers, when they do come and complain, they come out in the open and say, I am overly extended on my facilities. So what we emphasize is take time, read through the information prior to you getting into an arrangement with these institutions that we regulate, and try by all means to only deal with regulated financial institutions. There is a cry to say there's too much red tape or too much of a procedure to go through prior to obtaining a loan from a licensed institution. But it is that way for a reason, so that you are protected, so that you have recourse in the event that you do have a problem. Within these institutions, we also emphasize to say within room of your oversight, you are able to restructure these facilities so that you are able to assist your consumers as well. In the event that somebody is saying they are unable to repay within a particular period of time, extend the tenure of the facility so that the amount that you're repaying gets reduced. All these as a result of dealing with a regulated entity.
So those are the benefits.
Those are the benefits, yes.
Okay. We have a question from Ryan Isaac Banda. So, if an institution lowers its interest rate below inflation rate or competitors' rate, will it be pointed out as monopolistic acts? And let me actually cluster it with another question from Agrippa Lungu. If the loan finishes with the bank, do I have a right to claim my insurance fee? So these two questions. So
there are two aspects to this. Prior to you, I'll answer the last part, which is the credit agreement, the credit life insurance that's there. We emphasize to customers to always read the fine print. It's on a case-by-case basis. In the event that you are charged a once-off fee for insurance, and you are told to say it's over the tenure of the facility, you have the right to ask that particular financial institution to say, in the event that I settle this amount early, do I get a refund on this? They will communicate that element to you. So it depends on a case-by-case basis. We can't have a response to a particular matter. So like I mentioned, we read the fine print prior to the product being released, and we emphasize to say certain language should be unambiguous so that it doesn't cause confusion. So that answers the question on that part. The first question is with regards to lowering of interest rates. I don't want to speak out of turn, but the perfect way we can put it is we have a monetary policy rate. That is the base rate. That base rate determines what the interest rate is going to be. You'll find that institutions that we regulate usually add a markup above that. So we know for a fact to say they, at the very least, will have that amount.
Like there's the cost of money, and then there's your profit.
There's your profit. So that answers your question to say, I don't know what their business model would be in that case,
and how sustainable
it is, because we do assess them to say, how are you going to sustain the business? Because in most cases, to actually issue these funds, they have to get this money from somewhere. So once they get that money from somewhere, they have to repay it. How do they repay it? By the revenue streams that are coming from issuing loans to consumers in the public.
It's a chain.
Yes.
We have a question from Sunday Junior Murita. What factors are taken into account, and you're just from touching on this, what factors are taken into account when determining the interest markup by the leading institutions, precisely microfins? Their markups are extremely high compared to commercial banks. In my opinion, that's predatory.
Can I answer?
Yes, sure.
Okay. So I alluded to something earlier, Luanga, and I said there's the freedom of choice. We do not get into the nitty-gritties in terms of how we regulate these institutions to ensure that we find out where they are. We do assess. Obviously, like we mentioned, we have an AML unit that assesses sources of funds to make sure that the funds that are in circulation are not as a result of any illicit activity that's happening. But we do emphasize to say you have the freedom of choice as customers. That's the way we're going to answer that question.
So the emphasis on the bank is just that the institution discloses so that the person who wants to borrow has an opportunity to choose.
Has an opportunity to choose. Okay. You can choose from Bayport, you can choose to FNB, you can choose to Zanaco, you can choose any of the institutions that are in circulation. You will find that once you do your own comparative analysis, it will inform your decision where to go.
Okay. We have a question from, two questions from Daliso Alex Piri. Good morning, BoZ. I run a microfinance institution, which I started last year, and I'm a student at UNZA. 1. What is the Bank of Zambia doing to ensure a fair operating environment for microfinance institutions compared to commercial banks? 2. what measures are being put in place to help microfinance institutions manage high default risks while still serving low-income communities? So these questions are from Dolly, so Alex.
Okay. So like I had alluded to earlier, it's twofold. There's tier 1 and tier 2. And these tiers exist for a particular reason. The minimum capital requirement for a bank cannot be compared to the minimum capital requirement for a microfinance institution. We do understand to say even the customers you're trying to serve are from different demographics. The risk mitigation framework that is employed is vetted by the Bank of Zambia to ensure that it is robust. We also go through a very thorough process prior to actually having a licensed having an institution licensed and designated to offer these financial services. Part of that is to assess their ability to actually recover these funds once they're issued to the general members of public. We also take a deliberate effort to understand the demographic to which you are trying to address as a financial institution. If we find that that demographic is properly served, or if we find that from a corporate governance perspective, this institution doesn't have enough backstops and a framework to address some of these risks, the designation does not go through. So that's very, very important. Also, if he's running a microfinance institution from Munza, we emphasize that he makes sure that he obtains a money lender's license as well. This will protect him, and it will also build trust and confidence within our financial services sector so that people start to trust the system and start to get served from an underprivileged perspective all the way up to high income earners. Yes.
So we have a question from Matiola Chilinga. Could Bank of Zambia guide whether independent debt collectors need to be registered with BoZ, or if it's a different institution? And they say, of course, PACRA is key.
Okay.
So yeah, independent debt collectors.
So that's why we've said the moment we issue a license, we go through a robust process of ensuring that the institutions that we are regulating do not engage in any illicit and illegal activity in the recovery of this debt. So those requirements are very, very stringent. We always ensure that they follow the letter of the law. So to that extent, that's how we're going to answer that question.
Okay.
To make sure to say there should be no illegality with regards to the debt collection practices. Yes.
A question from Nicole Lee. So they're referring to, like, he made reference to the anti-competitive clause in the BFSA Act. Could he give examples of practices that would be deemed as such?
Anti-competitive is this strong-arming a client into obtaining a loan from an institution. We make sure to say there should be the freedom of choice. That's the first example that we said. I've emphasized to say, as a consumer of these financial services, you have a right to either bank with FNB or with Zanaco, with Stanchart or with Stanbic. That in itself shows you to say there is no anti-competitive behavior that's there. The freedom of choice is up to you. You will never be strong-armed, yes. You will never be strong-armed into doing that. Any MOU that exists between employers and respective financial service providers is that arrangement that's there. We make sure to say it does not strong-arm the consumer at all. That's the perfect example of anti-competitive behavior. Also, the ads that are released in public, we make sure that they are vetted, be it a billboard. If one institution is discrediting another institution, that in itself is anti-competitive, and we do not allow that to exist or happen within the space.
Okay.
Yes.
Or like, I have a financial institution and I also have another business. And then I compel my workers, like, every single person has to have a running loan at any given time.
Exactly. That's anti-competitive behavior, yes.
Okay. So we'll soon be concluding. So if you still have questions, as I mentioned earlier, you can leave them in the comments, both on Facebook and YouTube, and we will respond to you. by responding to you in writing on the thread itself. But before we go, maybe 2, 3 more questions. One is from Luyando Hamatwi. What policies are being put in place by the Bank of Zambia that are speaking to the macroeconomics in reducing the non-performing loan ratio? Yeah, that's our last question from the audience. We won't take any more. We will just we'll respond to them in writing, but you can answer this one.
Okay. The first element is the macroprudential aspect is we have a dedicated financial stability department that releases a report which is called the macroprudential stability report, if I'm not mistaken, or the financial stability report.
Yes.
That informs all measures that the Bank of Zambia is implementing. I'm not in that department, so I wouldn't want to overstep. But the simple way to address it is we license these institutions and we regulate them. So all products and services, once we notice to say they are not serving the general public, we do inquire with these institutions to say, we've received this number of complaints over your particular product and service. What are you doing to address it? Also, like I mentioned, these institutions have a mandate, an obligation on a monthly basis to submit returns which are analyzed. These returns inform information such as non-performing loans. It's privileged information, but it informs what policies it is that we actually release. Additionally, there are continuous revisions to the law that are currently done. Like I mentioned, prior to the BFSA of 2017, which is the Banking and Financial Services Act, the BFSA before that was in 1995, if I'm not mistaken. That already tells you to say there's a proactive engagement and proactive steps that are being taken to ensure that the laws catch up with current trends and current times that are being released. Additionally, there are also circulars and directives that are issued, such as the minimum capital thresholds that are required by banks. This is to address all manner of liquidity issues that are happening within the country. But we'll get into that. It's a bit too deep. It's a different conversation altogether. But like I mentioned, these reports are available on the Bank of Zambia website.
Yes.
People can easily just go and navigate to them, and they're available. They will speak to all macroprudential and microprudential initiatives that are being carried out by the bank to address some of the issues that are going on.
Okay, so final question from me, and I request that you speak as slowly as possible with as much emphasis as possible.
Okay.
What should a customer do if they are not happy with their financial service provider? What should they do?
Okay. I'll even look at the camera just to make sure. So I have emphasized the specific point which speaks to the frameworks we trust these institutions that we regulate to implement to have a robust way to address all customer complaint issues. The first step you should take when you have a complaint with your respective financial service provider is to report the matter to them. Once you report the matter to them, give them an equal opportunity to address that complaint. Once you go through the customer complaints directives, they will give you timelines within which to expect resolution of a complaint. Once you submit that complaint to them, they will communicate a timeline within which that complaint will be addressed, and they will also communicate a reference number that will be provided to you for follow-ups. You will use that reference number as record to show that you had initiated and made a complaint to that financial service provider. Once that timeline within which you were communicated to that that complaint will be resolved has elapsed, you have the right to follow up with them. In the event that you are not satisfied with the way they've resolved it, you have an option to even speak to the CEO of that specific entity or the managing director. In the event that you are not given audience to speak with them, that is when you can come and report that matter to the Bank of Zambia. There are available platforms through which you can make a complaint, that you can write a letter and physically drop it off at the Bank of Zambia, or you can write an email. The email address is complaints, that's COMPLAINTS @BOZ.ZM. In this email, please provide as much detail as possible. Your full name, the institution you are complaining about, the customer complaint reference number, the account, if you do have an account with them, the loan reference number, and a full description of your complaint as it is. We also emphasize to complainants to ensure that they attach relevant support documentation that will make it easier for us to follow through and also follow up with the institution. Once that email is sent to us, you can even call. The number is 0211 399 300. 0211 399 300. You can call in. Somebody will readily be available to speak to you. I'm usually at the end of these phone calls when they are made.
So now they can put a face to the voice.
They can put a face to the name and the voice. So you can speak to our switchboard and ask to speak to somebody from the Financial Conduct Supervision Department, and just mention to them to say you have a complaint. Once that complaint is received by us, we give a period of 20 working days. It's a long period and it's frustrating, but it's to allow us to thoroughly investigate the matter and have an amicable resolution for you. It is important to note that once you report this matter to a law enforcement agency, or you decide to go to the courts of law, the Bank of Zambia cannot adjudicate on that matter because a different authority needs to be given an opportunity to investigate the matter, and it also makes it prejudicial for us to get involved because they would have issued a ruling already. So we emphasize to say the escalation protocol should be run it through the ranks of the specific financial service provider. In the event you're not satisfied with how they've resolved the issue, then escalate it to us. Once it's escalated to us, we will provide timely updates with you to ensure you that we are following through at every step of the investigation. We then communicate what the resolution is. In the event that you are not satisfied,
even with the Bank of Zambia,
even with the Bank of Zambia, you have every right to pursue that matter with the courts of law. It is at that point that we will not be involved as the Bank of Zambia because we have adjudicated on the matter. But if you have new evidence that shows that our decision is contrary to what you are satisfied with, bring it to the Bank of Zambia, and we have the ability to reopen the case and look at it from a different perspective.
Okay, so final. Just repeat the email address, the phone number.
Okay.
Maybe I also know that people are also already familiar with the info at BoZ, so maybe to also include that for those that might not remember.
Okay.
But just repeat for us.
We emphasize to say all manner of complaints now should be channeled to complaints at boz.zm.
And the number?
Info at boz.zm is for inquiry on other matters, but any matter related to complaints or you trying to obtain any information related to the institutions that I had alluded to that we oversee, it's complaints at boz.zm.
And the phone number?
The phone number, unfortunately we don't have a mobile number or toll free at the moment, so it's 0211 399 300. 0211 399 300, and ask to speak to an officer from the Financial Conduct Supervision Department.
Thank you so much, Nsumbu. This has been really insightful.
Thank you.
And thank you so much to you, ladies and gentlemen, for joining us, interacting with us. If you have questions, you can still continue messaging and even commenting, and we will get back to you. Thank you so much. Have a good day.